Hello everyone! Today I will discuss how to effectively trade with a small deposit and why a small deposit is not a death sentence for a trader. If you have a small deposit and think it limits your opportunities, then this video is for you. Eugene here. Like, subscribe, let's go. A small deposit is a reality for many beginners, and it's challenging to grow capital when you only have a few dollars, like 50, 100. And while many face this, it is recommended to start with such amounts because it prevents you from making a critical mistake, like losing a huge sum that could seriously impact your life or doing other foolish things. Many traders say it's impossible to do anything with a small deposit, but that's not the case. It is recommended to start small, and the ability to trade with real, small amounts, not a demo account, provides invaluable experience. A small deposit can eventually turn into a large one with the right approach. As an active trader, you watch the market every day, look for promising setups, and review your trades. That takes a lot of time. That's why we created Takert, your trading Copilot. It shows you the full market picture, helps you catch the best opportunities, and automatically tracks your trading stats. Takert takes care of most of the routine, so you can focus on what really matters. Sign up using the link in the description. And if you want to master scalping, check out our course, Impulse Hunter. The link's down there too. Beginners often make a big mistake by depositing a small amount on an exchange or with a broker and immediately start using high leverage. They try not to learn with small amounts, but instead attempt to earn quickly and grow their deposit. This is incorrect. With a small deposit, the goal should be to learn trading. What is often done instead is trying to rapidly increase the deposit, for reasons unknown. What does this lead to? Of course, to losses. High leverage is a violation of risk management. There are situations where high leverage can be used, such as during low volatility, but this does not mean 30x or 40x leverage. If trading with 1x to 3x leverage on Bitcoin, for example, one might use 6x, 7x, or 8x, but certainly not 30x, 40x, 50x, or even worse, 125x. Inexperience and lack of knowledge often lead to improper risk management, which greatly exacerbates the situation. Today, I will explain how to trade with a small deposit and gradually increase it, meaning earning over time. Initially, these earnings might be small, starting from 30 to 21 cents up to $2 or $3. Trading with a small deposit requires a special approach. It's not simply a scaled-down version of trading with a large deposit. Precision, discipline, and quick decision-making are crucial here. With a large deposit, one might not close a trade at the perfect moment or might hold on longer, and even a small portion of the profit would still be substantial. This is not the case with a small deposit. However, a small deposit is a complete replica of a large one. You should always treat your deposit as if you have $100,000 in it. Imagine if you entered a position with 1% of $100,000, which is $1,000. If you took a 1% profit, that's $1,000. With $100, a 1% profit is just $1. Do you feel the difference? But with each profitable percentage, your deposit and income increase. During your initial learning period, you should value every dollar and take every dollar the market gives you. There's no need to chase super movements. Focus on scalping. A 1% profit on $100 is just $1. So every $10 already increases your next income. Therefore, it's important to understand this. There's no need to rush to increase it. It will grow naturally when you find your trading strategy. It's also important to understand that with a small deposit, you cannot afford large risks. This relates to the desire to quickly grow the deposit. We are not talking about rapid growth, but rather trading. Rapid growth is different. It's when a small amount is intentionally grown, knowing that it can be lost. We are focusing on trading, where you might make just $20 profit in a month on your initial $10. Someone more experienced might earn more. And sometimes luck or a good market helps, but high leverage can simply knock you out of the market. If these $100 are truly important in your life, you cannot afford to use 10x or 20x leverage because you could lose everything in just one trade. Now, imagine with 1x leverage, you would need to have 100 consecutive losing trades of 1% to lose your deposit. Of course, the math is slightly different as the amount decreases, but roughly, 100 consecutive losing trades is unrealistic. If I were asked to make 100 consecutive losing trades right now, I couldn't do it. Our goal is to stay in the market as long as possible with these $100. So set limits for yourself and avoid using high leverage with the goal of doubling or tripling your deposit. For small deposits, it's important to choose a suitable strategy. For small deposits, for the purpose of learning and simplicity, it is recommended to choose trading from bounces. It is a strategy that can significantly boost knowledge and experience. Focus should be placed on short trades. There is no need to sit and try to get 3, 4, 5% from a trade. Sometimes this happens, and sometimes coins are volatile. By the way, on volatile coins, it is recommended to lower the volume instead of increasing it, so that you have a normal profit even on super volatile coins. This will be an important skill for you in the future because controlling position volumes based on volatility is very important. So the point is to focus on short trades. From 0.5% to 1.5% is a perfectly good trade. A lot will also depend on your stop loss. You should never hold on to losses. Remember what was said. No one can make 100 consecutive losing trades. It's practically impossible. Therefore, your stop losses are not something to be afraid of. After a stop loss, there will be profits. A stop loss of 0.3 to 0.5%, for example, and a profit of 1.5%, 1.2%, 1.3%, 2% will cover everything. Therefore, this should not be neglected. Also, it is recommended to use a trading terminal, as the ability to use a terminal is very important and greatly simplifies trading and speeds up the process from decision-making to execution. Very little time passes. There is no need to type anything, no need to set anything up. Everything is set up in advance for trading. You just click and that's it. Everything is done through hotkeys, through the mouse. Everything is as simple and fast as possible, which is very important for scalping, for trading bounces, and for trading with a small deposit because you need to quickly make trades. The settings, of course, must be configured. Even if you are trading based on a chart, there are sometimes densities, especially at levels in bounces. This is doubly important. Densities, by the way, are showing themselves quite well now, and therefore this is important. Detailed settings of order books will also be in the training program. That is, a configured order book, pre-configured volumes, configured order book depth. All of this should be done. You should sit down and just be ready to press buttons, enter, exit positions, add to positions, take partial profits. All of this should be configured and ready. If you are not sure that you can do something on the fly, for example, finding a chart pattern, one might enter a position in an unconfigured order book and then quickly configure it. This has happened many times during streams and in practice because once you enter, decisions need to be made instantly and quickly. Enter, open a position, and then quickly configure everything else. This is because a stop loss can always be set even in an unconfigured order book. And yes, I forgot to mention, as was said throughout the video, we are taking $100 and will trade with them. For active scalping, Takert.com is used to save on commissions. A 35% cashback on commissions is received from each trading session the next day. Any operations with crypto, as well as medium-term trades, are opened on the Binance exchange. If you don't have accounts yet, be sure to follow the links in the description, create accounts, and get maximum bonuses through the links. What is the difference between trading with a small deposit and trading with a large deposit? With a large deposit, more aggressive trading and larger risks can be afforded. But these risks will be, you see, a smaller percentage of the deposit than with, say, $100. For example, entering a position with 3x or 5x leverage. With a large deposit, one might even trade with less leverage. That is, if you had a $10,000 deposit, you can enter with $5,000 and the potential losses will be lower. You can enter with $2,000, $3,000, $4,000, or $7,000. That is, you reduce your risks even further. But this certainly does not mean that you should immediately move to a large deposit. It is generally recommended to grow your small deposit. What about a small deposit? This, of course, requires strict adherence to risks. You cannot hold on to losses anywhere because you cannot enter with a smaller volume everywhere. You can with $50 if you have $100, but you cannot enter with $1 or $5. That is, few coins allow this. So there are fewer trading variations, but the principle is the same. So there are few differences, as was already mentioned, and you should treat a small deposit exactly the same as a large one. The main thing is to follow the rules of risk management and use a suitable strategy. Also, it is important to use a trading terminal for fast and convenient trading. And remember, the link to our Trading Copilot for Traders, Takert, and the Impulse Hunter Scalping course are in the video description. Successful trading, and see you in the next videos!